Wow, thank you very much. I love this conference. It's the best conference to be at, as you know, those of you who are here, the best people, the best talks, the best panels, and I'm so glad to be up here today. We're missing one lady who's, actually, she's taken off the list, Jillian, who's very sad from, not very sad, but she's very sadly sick from Gemini. She had an ear infection and couldn't get it, so she sends her apologies. Amazing lady, though. We'll catch her the next time. But today we're going to have, the title of this panel is called DeFi and Traditional Banking, Convergence or Collision. I'm going to call it Fight Club. I'm going to invite the Fight Club members to come up. So there's Simon, Lex, and Jonathan. You'd like to come to the stage, please. This is really cool. We're doing our best to get more women on the panels. Jillian would have been here, as I say, so I'm very sorry my namesake is not here. But can I ask our three esteemed panelists to introduce themselves? Simon, I'll start with you, please.
Yeah, sure. I'm Simon Jones. I'm the Chief Commercial Officer at Banks. For those of you who don't know us, we're market leader in custodial and non-custodial crypto payments. So we work with people like Ledger, 1inch, MetaMask. You might have seen the world's first non-custodial debit card recently in terms of direct spend from self-custody. So I lead product marketing alongside one of my colleagues who's filming at the moment, and the sales and partnership side of the business.
So Lex, would you introduce yourself, please?
Hi, everybody. My name's Lex. I'm a managing partner and co-founder of Generative Ventures, which is a fund focused on the intersection of Web3, fintech, and artificial intelligence. Previously, I was the chief economist at Consensus, where I spent 4 years chasing ghosts and NFTs and all the rest.
And before Jonathan goes in, Lex has a doppelganger here as a prize if you can figure out who the doppelganger is at the conference. Anyway, I'll give a prize to someone who figures that out. Anyway, Jonathan, please.
Yeah, I'm Jonathan, one of the co-founders at Nordark. We're a banking platform for crypto companies where we offer dedicated IBAN accounts, so fiat accounts, crypto trading directly from the fiat accounts, but also custody, staking, and lending and borrowing solutions.
Cool. So the title of this panel is DeFi and Traditional Banking. Never the same should be in your mouth at the same time, I don't think. But I'm going to, before I say, is it convergence or is it collision, do we want it to come together? Simon, I mean, do we want TradFi and DeFi to be in the same bed?
I've long advocated for non-custodial neobanking, right? I actually think that the principle of centralized custody is irrelevant and should be consigned to history in terms of as a concept. Now, a year ago, I was writing blog posts about how Web3 takes over fintech. And that naturally is what should happen. It should be driven by consumer, it should be driven by choice, it should be driven by quality of product. Unfortunately, what we're seeing at the moment is this kind of regulatory hurdle and barrier that's being put up to self-custody, where effectively a lot of regulators saying, hey, we don't like self-custody, we're going to block it. And it's illogical. It's the same as trying to say you can't keep money under your bed. But unfortunately, that's what we're seeing. So it should be convergence, but in my view, it will be collision. And it'll be one of those things where you see these kind of tectonic shifts in user bases, and then by the end of it all, people suddenly go, oh, the thing we didn't want to happen happened. And we've actually put a whole chunk of the world offside from the system that we were trying to protect. So in my mind, it'll be both.
We're not going to stay in the fence, though, in this panel. Jonathan, what do you think? Do you think it's going to end up in a big fist fight, or is it going to happen? I mean, people talk about it the whole time, but will it happen?
I think it's a collision for sure. I would say would change perhaps in 10, 15 years, but I think we have much larger problems at the moment. Just where we are standing, it's just getting access to traditional banking rails at the moment. I think the banks they don't really have the competence at the moment to venture into DeFi. I mean, the current stage is that you need to go through sort of prime brokerage solutions to even get access to DeFi products if you're an institutional customer. So I think collision.
Okay. And Lex, you were saying prior to your current endeavor, you were economist with Consensus for 4 years. You're looking at these things all the time. What's your feeling for what's happening in the marketplace now?
I'm blinded by information. It hurts. So I'll just disagree with you for out of principle. And I don't know what you said. I just disagree with it. So I think, what's that?
So Joe Biden.
Yeah.
No side whispers.
Harsh. So I think the non-custodial world is fantastic and amazing, and I'm a huge supporter of it. And I think what's important isn't for one side to win and for the other side to lose, but rather for the option to be created. This is just a trade-off. So the custodial model is super convenient and lovely. I don't want to deal with my finances because they're complicated. I don't want to deal with security. I don't want to deal with figuring out how to invest things. You take it, you do it for me, give me a smiley face at the end of every month, and I feel good. And that's a fantastic user proposition, and it is a profoundly better user proposition than here's the headache of figuring out how financial engineering works, and then once in a while somebody steals all your money, which is kind of the core value proposition of Web3 today. No, there's like no response from the crowd. It's like everyone's super tense. Thank you.
Maybe we ask the crowd, who has lost money in Web3? Tokens. Okay, so half the audience.
Yeah, so let's do it. Who here has used DeFi? Great. How many of you have been phished? There we go. How many of you have been rugged? How many of you bought NFTs? That's your own fault. Shouldn't have done. Okay, so I'm still in the middle of a rant, right? So custody does have a place, which is somebody just figures it out for you. Yes, you can do MPC and safe and blah, 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 but end of the day, it is nice to give it to somebody else to deal with for you. It's nice to be able to, on your credit card, say, no, I don't want to pay that, give the money back to me, or I forgot my password, please reset it for me, or I have feelings, talk to me on the phone about my feelings about money. That's nice, but the thing is, when you do that, what you do is you create a principal agent problem, which is your money is not in your wallet. You don't control it anymore. It goes into a box, and then there's this relationship. And this relationship is actually what, in my view, all of the regulation is about, because your agent ends up doing the bad things all the time, right? So in the case of Sam Bankman-Fried, his big thing wasn't crypto. His big thing was taking people's money and using it for his own sake. And that's the case with all the failures in traditional financial services. Is you've got these principal agent problems where somebody is like, hey, what if I just dip into the customer funds, or what if I just buy a bunch of treasuries and not mark them to market when the market goes down and my bank blows up, and so on and so forth. So by the nature of that delegation, you end up with the principal agent problem and regulation as a response. And thank God we have DeFi as a reaction to that. So the reaction is you don't have to delegate, you don't have to engage with that whole apparatus of somebody doing it for you, even though it's nice. And here's where I agree with you. I think having the option of DeFi in the same way that having the option of Linux, whether for your own insane personal server farm or for Google's Android deployment across billions and billions of people, having that option is extremely powerful and I think much more profound than just delegating to other people.
So you're saying choice. Jonathan, but I'll let you get in a minute, Simon, but Jonathan, would you agree with that summation? It's the relationship, not the technology?
Yeah, I didn't really thought we were allowed to be sort of in between, but yeah, I agree. I think there's a lot of good use cases in DeFi. I guess for retail customers, it makes sense to just adapt the DeFi and sort of combine them too, but I'm more like focused on the institutional side and seeing how they can get access and if it's convergence or collision.
I mean, I agree with what Lex was saying, because when I first got into this space, given my extreme age and all the rest of it, I got into the space in 2017, and I just could not understand how on earth can I figure this out, the whole concept of money, and then all these keys and trying to figure stuff out. It is very, very confusing. So is it our fault, I say our because now I'm in the industry, that it's not simpler? I mean, like, should we have it much simpler and then people have choices? What do you think, Simon?
Look, I mean, the next generation of product has to be much better than the products we've had today, right? They're not accessible, they're not usable. They wouldn't pass the, would you set your mum up on this test, right? Which is always my benchmark. Anytime anything arrives at Christmas, I make sure to leave on Boxing Day if it's electronic, right? And I wouldn't want to, set my mum up on a DeFi wallet. But that doesn't mean that the next generation of product can't be better. And to pick up on something Lex said, you talk about principal agent, right? And you talk about something like Sam Bankman-Fried. I mean, that's just shadow banking, right? It's not really crypto. It was, hey, stick everything on this exchange over here, and maybe we'll let you play with it if we feel like it. So I think when you look at the next generation of product creators, you have to say, well, fundamentally, how do you create the consumer benefit? Now, when you look at the kind of guardrails that have been put up now, and for example, if you look at somewhere like America, it's a great example, right? Every single facet of their system is designed to effectively enforce the power of the banking world, right? So if you don't have a bank account, for example, your credit score will be horrific. If you don't have a good credit score, you will struggle to get basic access to things like utilities, telephones, et cetera, right? And the reality of it is there's no reason why you need to do that. You can apply technology to that problem to be transparent. So this idea that my only choice today, if I want access, if I want the ability to go and spend in the real world, is that I have to give my money to a bank and then politely ask them to take it back. To me, that's a concept that should be obsolete. And I think that when you look at, this space, we have not been great at consumer. But that doesn't mean that in the next generation of products, we don't get better. And you look at things like passkeys, for example, which I think are a fantastic example of something where you can actually fix Web 2. Because one of the huge design flaws of Web 2 was they didn't put passkeys into browsers. And you say, well, if you simplify that, there's no reason why you can't start to truncate a passkey in the way that you have a password to log in now. There's no reason why you can't use your wallet as a signer, right? One of the products that we're actually creating at the moment with a certain wallet, I shall remain nameless, but you might have heard of it, Lex, is actually the ability.
I don't know what you're talking about.
Is actually the ability.
Coinbase.
That one, yeah. Is actually the ability to sign a transaction using the chip on your debit card, right? And when you start to look at that evolution, you start to look at where we're at. You're right now. Going back to Lex's point, which is to say, okay, somebody else figures this out for me, and that's true. But the figuring out should be done at the technology level. It shouldn't be done by a product team sat somewhere in Stamford, Connecticut, or Canary Wharf. And you look at some of the trends that are coming in now, you look at things like programmatic yield, for example, where you can just earn passive yield by holding a stablecoin. These types of things, actually, if you start to put them together with better on-ramps and better off-ramps, you actually create an environment where the benefit is converged to the user. And how I see DeFi generally at the moment is a little bit like Uber, right? So if you look at the history of Uber, it's analogous because a lot of people tried to ban Uber. The French did, right? The French try and ban everything generally that's quite good. And then Uber just turned around and said, well, look, actually all we're doing is we're connecting peer-to-peer. We're connecting driver to user. They made driver register as a business to get on the platform. You request a ride, they connect you. Same principle of sticking your arm out, except it's the digital version. And what they found was that actually, it was almost impossible to ban it because the legislation was so far behind. And that's where I think we are in this market now. You've got this digitalization principle that's come through. You have got consumer protection, which is absolutely right, which is trying to stop bad actors. But at the same time, bad actors exist everywhere. And whilst people talk about, have you been phished, have you bought an NFT, which we'll exclude that one for a second. If you actually look at the statistics on fraud rates, actually they're not that different to TradFi. If you look at the amount of people who get app scanned on their bank accounts, you look at the number of things like that, and actually, sure, fair enough, you have got that protection. But the point is, when we think about these things, there's no reason why you can't have that protection. There's no reason why you shouldn't be able to insure your wallet. There's no reason why you shouldn't be able to insure your transactions. It's just the fact that we're at an early stage of the development, the evolution of the space.
Okay, so what you're saying is that, an interesting point you're bringing across is that we should do better in Web3, we provide protection, better ease of use and user experience. But I guess that doesn't take into account TradFi. TradFi doesn't really want DeFi. So what is TradFi doing, or how can we stop TradFi in the form of Gary Gensler? We're the Gary Gensler fan club here. How can we, like America seems to be going to pot when it comes to crypto, how can we stop that happening perhaps in the EU or in Britain?
So what I like about your analogy is that Uber is a famous example of a decentralized company.
Exactly.
Yeah. Again, nobody laughing. But, yeah, you got it. Okay, thank you. That's all I just need one, and then I can sort of just linger on it until everyone else finds it uncomfortable and then laughs nervously.
Is it the same as your
Tinder
stats?
What's that?
Same as your Tinder stats, yeah?
Oof. Oof. That's harsh and very personal.
Sorry.
Lead on.
Okay, so this is a non-joke. In our venture, on the venture side, we are seeing fintechs So fintechs are the distribution arm of traditional finance in a simple way, right? They control mobile distribution or they control online distribution. They sell traditional financial products under a regulatory regime. That's the nice way to put it. The mean way to put it is they put Scotch tape on the old thing to try and make it work in a digital age. And so it's been a long and frustrating time to get fintechs to come into our industry, and that is finally happening, right? So if you look at, have I been, can you hear me? Is that
I
okay?
can now, and you look this way.
Oh, no.
Yes.
Okay.
You have to look at me, sorry. I apologize.
You're just like Uber. So Revolut launching their own stablecoins. Robinhood, I think, is looking at launching their own stablecoins. Visa coming out with sort of a integration network hyperstructure for stablecoins, expecting a world where there's going to be lots and lots of issuers. And I think right now we're actually, I mean, the DeFi stuff I think is quite mature, but the stablecoin bit is the part that's breaking out from being Web3 on-chain native only to being a consumer level product. We're actually seeing that. So Tether's enormous profitability, something like $5 billion per quarter or maybe 2 quarters, something like that, is an enormous revenue pool that people are going after, especially with rates still being quite high. The other data point on the fintech or TradFi side is that the attempt to Scotch tape together all of the infrastructure is in many ways failing. So, you know, in the UK and in Europe, you've got open banking and so on. The adoption of that has been, let's call it incremental. You're my audience. You're my audience of one. I love it. And then in the US, you've had the blow up of Synapse, which is an embedded finance layer that was meant to connect to all the banks and then build a platform, a single ledger for fintech distribution footprints to go out to the consumer. And that has blown up and taken with it about $100 million. That is just poof, gone. And so this is in bankruptcy. It's a huge scandal. And, you know, and people are realizing that having the core value proposition of on-chain money, which is the money is there and everybody knows where it is and it's transparent, is actually really, really valuable and profound. So I do think, and I'm seeing a lot of companies getting started in this space. So I think over the next, you know, 1 to 3 years, we're going to be inundated with the stablecoin neobanks. And then the large neobanks and robo-advisors that are already in place are bringing to market these stablecoin first products. And once you have that, you know, you're training people to have access to money on chain. And once you have that, then you're going to get them playing around with DeFi and financial engineering. So that's the sequencing I see.
Okay, I know Simon wants to get in here, but I want to just go to Jonathan first. Do you want to respond to that? Because I know Simon has got stuff to say.
Yeah, I think I agree with Lex. Like as you mentioned, like all the fintechs, they are like the one first starting a movement, sort of. And then on top of that, I mean, I guess everyone thinks this as well, that a lot of consumers will be using DeFi without them even knowing it, for sure. Like, it wouldn't surprise me if Revolut started some sort of yield product and people don't really understand it's a yield-bearing DeFi product in the background. But also, no TradFi bank really wants to be the first one to issue the stablecoins. It will be more fintechs, and then perhaps one of them just grabs a banking license or.
And I know we were speaking earlier, again, talking about why TradFi is not moving into the space. You were saying you had this nice observation that TradFi, they hire people who are crypto-friendly or curious, whatever. They train them up. And what happens to those lovely people?
Yeah, so I've heard some cases, actually. Basically, just getting on board on a TradFi, they can't read Etherscan, right? They train some intern. It takes like 6 months to even understand Etherscan, sort of understand the source of wealth for the customer that's getting onboarded. And then once they actually learned Etherscan, actually went hardcore into crypto, they just will be going and join a startup in crypto. And I've seen that really happen.
That's one reason why TradFi is not getting into the DeFi space, because when they do train for the people, they go and leave because the TradFi is too
they can't really keep the talent.
No. Anyway, Simon, I know, Simon, you want to get in, because you've got a bee in your bonnet about stablecoins.
Yeah, I was going to say, I mean, Jonathan, you know, you're not wrong when you say that for people to actually embrace this technology, you have to realize they're not using it, right? And that's actually one of the things that I think, you know, in this sector we're super guilty of. We sit here and we talk about EVM standards, we talk about this other stuff, which you're talking to the 0.01% of the population when you do that.
Why, thank you.
Yeah, it might be a correlative to intelligence.
Yeah, I don't know that it's like a positive.
No, I agree.
0-1.
But I think when you also, you take that point and you say that why a bank's not embracing this, I mean, when does a turkey volunteer to go for Christmas, right? I mean, if you think about that transvergence and that convergence of wealth, you're talking about an industry at the moment where you're spending over $2 trillion a year just to make payments, right? But Lex is absolutely right when it comes to stablecoins, that is the way in which you get adoption. Because actually what stablecoins start to do is start to change concepts. And one of the things that I always say is, like, you look at something like a cross-border payment, right? At the moment, the best, easiest way to send it is SWIFT. And I want to turn SWIFT into the equivalent of sending a fax, right? I could send you a fax, but why would I? It's the least effective, least efficient way of sending it. I'm going to send you an email. Because most banking, as it is in terms of TradFi, really what they did was they didn't really digitalize it. They just moved an analog process onto a computer. They never changed it. So if you look at, for example, a card payment, it's 9 separate steps, end to end, to complete something that should be possible to do via a peer-to-peer API payment. You need the network that does the validation because that's the framework that has been built and exists, and that's the one that consumers trust. Now, we're starting to see this world at the moment where you're saying, well, look, actually within this world you can start to play. And people like Visa, they're trying, they have accepted Solana for settlement in USDC. They haven't moved their network over yet. The only people who've actually embraced on-chain spending directly is MasterCard. It's actually something that's quite annoying to me. I actually did the world's first end-to-end on-chain settled card payment a couple of years ago, but then CZ and Coinbase got charged by the SEC, so MasterCard pulled the press release. But these are the types of areas where you say, look, take it down to, I want to send money to someone in America. I can do it instantly, globally, and seamlessly. And the interesting thing then, when you extrapolate that concept out and you talk about all these different stablecoin issuers and stablecoin banks and various other things, is then you start to get into this secondary layer, which is to say, well, how do you do the FX? How do you do the conversion? And actually, a lot of the stablecoin world is really going to mirror TradFi in the sense that it's really just going to become a form of FX. How do I price it? How do I convert it? How do I receive it? How do I make it usable? And actually, that's one of the really interesting things that I'm seeing in TradFi is that the principles of pairs, i.e. how you swap something to something else, is definitely going to be emergent, right? But actually what you could swap becomes wider. And as you build out that infrastructure, you suddenly get to a world in which if you can price it, you can spend it, and that actually really starts to create a digital revolution in terms of monetary policy. And before I go full Nick Spanos, I'm going to hand back to you.
Okay. I'm just thinking, you guys are talking about how there should be a proliferation of stablecoins. How will that work? I mean, like, we know that there's a couple of major ones and there's more coming out. Does that end up, do we have lots of different currencies then in the stablecoins, and will they be priced differently against each other? Is that, so we end up, like, I quite like living in the Eurozone because when I travel in the Eurozone, it's very simple. I don't have to think about money or anything like that. Okay, sorry, that's the old-fashioned way of doing stuff, not thinking about money. But if we have loads and loads of stablecoins, is that going to end up in a nasty mess? Lex?
Long live the crypto dollar. I mean, I don't know that there's more about it, right? I think the projecting what we have out now, right? You could have 1,000 pairs, they all live on Curve, and then there's $1 trillion in there. I think it's the dollar. I think all the rest is not respected. Mm-hmm. There's no real market supply of the euro or the pound or the yen, regardless of the attempts to build it. Like there are the digital assets that support it, and there's, Monerium's been slogging uphill for 100 years trying to build, and nobody cares at all, unfortunately, except for in the cases maybe of institutional cash settlement, where they're, doing proofs of concepts for tokenized bonds, and they need somebody to do the pound-denominated or euro-denominated cash leg. But for crypto-native adoption, whether you like it or not, it's the crypto dollar, which is the stablecoin instrument. So there's two uses of a stablecoin. The first is capital markets, and the second is payments. So if you think about your brokerage account, when you sweep into cash, that's sitting in some sort of money market fund, and generally that's money at rest. When you have your bank account, you've got money at rest, but really you're spending it, and you've got a payment instrument. And you've got different regulatory regimes globally, and then within jurisdictions for deposits in the banking world, and then for investments and the brokerage world, the securities world, even though it's the same cash. So crypto collapses that. It collapses the distinction between, this is my money market fund, and these are my bank deposits, and this is my savings account, all of which is basically tantamount to the color of paper that your fax is sent on. I'm referencing what you said to build upon your earlier point.
That's way too pally, sorry. You're on a panel, you're not on a friendship panel.
My audience now.
This prices go up and down, but it's the friends you make.
Yeah.
Thank you. Okay, there we go. I completely lost the plot.
We'll go on to Jonathan. You're talking about the crypto dollar and the crypto collapses, all the different types of money that we might perceive.
Yeah.
So Jonathan, do you want to maybe respond to that? Or again, if the title of this panel is, is it going to be a convergence or is it going to be a collision? Like, are we very arrogant in this space that we think we don't really care about TradFi? Is that what it is? Is that why we don't care we're going to do our own merry thing anyway?
Yeah, I mean, I think we're seeing like sort of the first problems now when Mika comes arrive as well. We're seeing Circle trying to be fully regulated, and then see Tether, they don't intend to get regulated in the European region. So I think... Because
Coinbase is delisting, isn't it?
Yeah, Coinbase is delisting USDT, right.
Mika.
And I would say, like, let them compete for a while. I don't think it's a mess that we have several different issuers. And on your point as well, Monerium, they tried to bring Euro on-chain. Hasn't really worked at all. So I think we'll see who's the largest issuer in a while, and then we're seeing new products coming on, like yield-bearing stablecoins and so on. So I would say give it a few years, let Mika arrive, and then we'll take it from there.
One of the conversations I've been having recently is about confidential computing, and the notion that the reason why business can't get involved with crypto is that it needs confidential computing. Everything is transparent. We all know Vitalik's wallets and what he does with his money, well, the ones that are known. So is that part of the reason why TradFi isn't coming onto crypto, because of that transparency?
I mean, there's no reason why you have to do things on a public blockchain. I think that you see three issues, core issues in terms of TradFi adoption within that space. So issue one, of course, is that most banking systems are effectively a form of closed loop. They might be a very large closed loop, but they're still a closed loop. So what that means is that you've got various market participants transacting. So if you're, for example, JP Morgan are building their own blockchain, as we all know, based on a version of Ethereum. But the big issue is you have to get multiple participants to act in unison, right? So what does that look like? Well, it looks like, you don't want to be the person who owns the world's first mobile phone trying to send a text message because you have no one to text, right? So that's the first issue. And big banks generally are not great just due to proximity, scale, everything else at building closed loops. But there's some good use cases around that. I mean, Nomura, for example, actually built a closed loop for settlement on a private blockchain between their different offices. So they were moving money between the US and America on a private chain. That's the first point. I think the second point, though, is that when you start to look down into cryptographic encryption, for example, so you start to go and talk to someone like the FCA about homomorphic encryption. Good luck trying to explain that principle to them. I think the third point, though, of course, is that most TradFi institutions, they have a very traditional approach to procurement. They like mature technology, like technology that's proven. And I think realistically, there are very, very few blockchains that you'd actually say were genuinely proven technology. I think you could apply that concept to Ethereum, even though you could say there's some mistakes in the design of the original Ethereum chain. You could apply that to maybe one or two other chains. But actually, when you look at the relative volumes, when you're moving billions of transactions a day, as we sit here today, I'm not sure there's a single blockchain you'd want to put that through on a public blockchain because of stability, right? It would fall over. If you tried to put 1 billion transactions on Solana, or even 50,000 transactions on Solana, it will crash. So I think that it comes down to a mixture of factors, but I think privacy is not actually the biggest driver. I think the bigger driver is the fact that TradFi is so used to operating in a scheme, or cartel, if you want to call it that, where they all act in unison, they all communicate with each other through the same networks. If you start to deviate those networks, but actually that's where the opportunity is for people in this room, that we can become the non-standard token creators on those networks, enable those institutions to talk to two different worlds.
Do you think then, another thought I'm just having now as I'm standing here listening to you guys, we're talking about TradFi and DeFi, but of course it's all the neobanks in the middle that are trying to do things there. You know, you talk about if you have a mobile phone, no one else's mobile phone, who are you going to text? Yourself? A bit sad. So, I mean, but these neobanks are huge and expanding tremendously, and they're kind of bridging that gap just a little bit. Is that maybe where the convergence is going to happen? Jonathan, what do you think about that? Is that reasonable?
Yeah, for sure. I mean, we see several neobanks doing, for example, cross-border payments. Another reason, like, where customers might be using stablecoins and crypto in the background without even knowing it, is I think they're forefront for sure. We ourselves, we don't classify ourselves as a neobank. We try to sort of, it's like a meme, but bridge the gap between TradFi and crypto. So I think that's on the forefront. And I think those, we're seeing Revolut adding crypto each day, new crypto pairs and so on. So for sure.
Because I know that my sister, I was staying with her recently last year in Dublin, and she's Revolut, and I said, buy some crypto, buy some Bitcoin. And she did. She bought $50 worth or euros worth of Bitcoin. And she's quite excited by it. So is that where she's a nurse, she's no interest in this space. Not that saying the nurses don't, but she's no interest in this space whatsoever. Is that, Lex, is that where we're going to go? Is that the convergence, the neobanks?
Yeah.
Okay, do you want to expand on that? Share your knowledge.
I
Is it too simplistic?
I don't want to beat a dead horse, in the sense that, yeah, of course, 100%, right? So the fintech distribution that these firms have established is now going to point at crypto-native products. You know, not necessarily at scale, but at some amount. But it's the same thing as like being excited about the Bitcoin ETF or the ETH ETF. It's like, amazing, wealth managers can finally sell a wrapper of digital native assets into an asset allocation into a portfolio management system from 1985. We finally slayed the dragon. You know, it's the same thing with the neobank story. It's like these fantastic Web2 fintech footprints. You know, how can they put a traditional wrapper around digital assets to make it easy for people who don't understand what's going on to buy it? So it's nice, but it's, I think, an intermediate step. And if we're going to go for analogies of highly monopolistic companies as decentralized alternatives, think about for example, the transition into the internet and the creation of Google when it still worked. You know, so what was the bigger opportunity, right? To build a search engine of the internet or to digitize all the books, right? So it's nice to digitize all the books. Fantastic. We can look at the PDF or get them on a Kindle or whatever you want. But the opportunity is not to get all the books on the Kindle, God bless Shakespeare. The opportunity is to build literally 1 trillion websites, right? And so the people who built 1 trillion websites and then figured out how to search that are far more, profoundly impactful than the people who digitized Shakespeare. Similarly, if you look at e-commerce, which is a comparable shift, you can have the opportunity to build, an internet-native business model where you don't have physical footprints, you don't have stores, you just have websites and you buy traffic in an internet-native way, and you grow that thing to be a $3 trillion company, or in the case of Alibaba, right, doing the same thing and bringing people into the digital age through commerce. Or you can work in the digital transformation department of Walmart and make a really nice Walmart on the internet. Of course, if you look at the distribution of terrestrial retail, Walmart's there, but Kmart and Popmart and S-Mart and all the other ABC marts are dead. So what's the opportunity? Is it to try to build the Amazon or even like a little Shopify store, or is it to push uphill for a decade backwards to make Walmart have a nice website? And so for me, I think even though it is like such a grind and so difficult and so hard to be committed to Web3 in the current market and with the current noise and with the horrible, horrible people in our industry constantly grifting and scamming everybody, I am still far more interested in building the Amazon and the Google versus dragging the old stuff into the current century.
Okay, you're nodding away there. Simon, do you want to?
Yeah, it's interesting, right? So, I mean, I spent the best part of 10 years of my career working.
Did you work at Walmart?
No, I didn't pass the interview. But the interesting thing is,
It is personality-based.
Exactly.
Yes.
A psychometric test. Yeah. Security will
You got me on Tinder. Come on. Happily married, man. Why am I?
To be fair, he's probably more accurate as well. Yeah, the interesting thing about this will be I spent the best part of a decade working for one of the FANGs, as they were now known. And I think what was really interesting about DeFi is that when you look at the history of the world, you look at where things have come from, most of the monolithic corporations in the world of technology have either come out of China, like Alibaba, or America. And I think DeFi will be arguably the first space where you start to see the next generation of monolithic businesses in terms of revenue and scale actually coming out of emerging markets. I mean, there's 1.2 billion people in the world who don't have access to a basic range of financial services at the moment. And that's because ultimately people have determined in this kind of TradFi world that those users are not worth serving. And those users sit in generally places like Latin America and Africa. And I think when you start to see a transference of wealth, and then you start to say, well, hang on, we can actually give these users functionality because if they're in a mobile phone, we can give them access to a basic range of financial services. Suddenly it'll be one of those things where you start to see these companies emergent, where they come out of different parts of the world where we're not used to seeing these companies come from. And actually, at the end of it all, what they've worked out is they've applied technology to the problem. And that's actually, in my mind, by far and away the best use case for DeFi. It's plugging the gap. Because we all know that if you can find a gap, you can grow. And when you can do that, ultimately, the question is, how big is your scale challenge? And if your scale challenge is to say, well, I can reach 15%, 16% of the world's population with a product, why wouldn't you go that way?
So we've got the wrong people on the panel. You guys are very male, very white, not saying very stale, but we should maybe have people who are coming from emerging markets. And you're right, because I mean, the obvious, again, going to the mobile phone, people in developing countries didn't have a landline.
Yeah.
They went straight to mobile. So that's where the opportunity is, and solving problems. So do you think, we're coming close to the end of our panel here now, so do you think then that the solutions are going to come from need as opposed to, again, I said earlier, are we very arrogant in Web3? We're telling you what the world needs. So will need push it maybe more than our arrogance? I'll start with you, Simon, and it'll be your closing comment here now.
We're extremely arrogant in this space. Yeah, I mean, because ultimately a lot of it doesn't go down to the consumer, and to pick on what Lex said, there's a lot of people in our industry who really exploit the very worst of all kind, really. Yeah, they're exploiting people's fears, their hopes, they're shilling NFTs or scam coins or whatever, right?
I feel my whole life flashing before my eyes.
And that's where we need to stop. But ultimately, if we are to grow and we are to see this technology really become emergent, and it's doing really well, 12, 13 years in really to kind of adoption, far ahead of the curve for mobile phones. It didn't get adoption for almost 30 years really post, the first creation. But we've got to think differently. We've got to think about concepts, we've got to think about benefit, we've got to think about user, and ultimately we've got to think about where are the opportunity sets. And you wouldn't go and build Facebook today, you wouldn't go and build Uber today, it's been done. Right? But you could go and build the next generation non-custodial neobank, which gives the user the benefits they want in the place they want them.
And maybe decentralized, because I know with the Celsius debacle, I loved that whole narrative at the time when it was there. I believed it. And
Can I just tell you a really funny story about Celsius? Alex, the erstwhile CEO of Celsius, told me that they never liquidated customers because that made a bad consumer experience.
They never, what, sorry, say again?
They never liquidated customer loans because it resulted in a bad customer experience. So if you think about that from a borrowing and lending perspective, just think about that for a moment. Yeah.
Yeah, interesting. Okay, so Jonathan, I'm going to ask you closing remarks now. So where are we? We haven't really had a fight on stage today. We've had a love-in between these two. So
I feel we're a few years behind.
Stop being so arrogant. Is that maybe what it is? Maybe build things that people need.
Yeah, I mean, it's a lot of arrogance in this space right now. Then I don't think that the next million of users will use Twitter the same way we do and can find all those shitty NFTs and so on and just take the high risk. So I think there sort of needs to be someone that bridges the gap, could be a neobank, bring on the next million of users, giving them sort of safer alternatives in DeFi, just bridging, giving fiat rails to Aave or something like that.
Yeah, because I really don't want the TradFi to win. The banks took my home, confession. I'm not fond of the banks, and they did it in such a way that was so arrogant and meaningless, and not even commercial, which is crazy. So, Lex, you're going to get the last word here, I think. What can we build? Can we not be arrogant in Web3? Can we build something that's meaningful, and that serves purpose and doesn't go to the moon. You know, is that possible? Are we capable of doing that? And so that TradFi just goes away?
I think we have already built something meaningful. I think the metrics across Web3 are better and higher than ever. So the ennui and financial nihilism that people have is either undeserved on the fundamentals or a reflection of what people want, which is for prices to go really high, rather than for things like, you know, how many millions of people are unbanked. You know, pick your poison. I think we're a little bit past the Trove disillusionment. You know, we've had that ride down, and now it's sort of like a slow, salty grind up. And I don't see it getting worse, but I think we're past that initial sort of Cambrian explosion of anything's possible, and now we see what the things that are possible are, and they're being built and they're getting better. I think arrogance is a required and important thing. For a founder, it is insane to spend time building anything. Your odds are horrible. You should quit. Keep working in Google or JP Morgan. You will have a much better and safer life. And so only the completely insane, arrogant people are out there building things, and that's, you know, that's exactly how it should be. And then the last thing I'll say is that finance is the same, whether it's on Papyrus, Fax, core banking platforms, or DeFi. So, you know, end of the day, I don't think that we need to feel entitled to DeFi or decentralization or any of these things and say the prior generation got it wrong, because end of the day, the financial functions that we're talking about, payments, banking, lending, savings, investing, insurance, they've been the same for millennia, and you know, prior generations just had different tools. So I think we are in a common project. And I think that common project requires courage and commitment.
Thank you very much. So keep building, be arrogant maybe, and I think you're right, you have to found need to be arrogant, but let's get real solutions. I'm taking that from this conversation. Ladies and gentlemen, thank you very much for this panel. If you'd raise your hands for our guests. Thank you.